Welcome back, and almost 300 points higher now on the index, continuing to maintain, but the Friday high continues to remain a bit of a barrier for the Nifty. 24,365 is that level. We are continuing to hover around that 24,330, 24,350 levels for the Nifty. But the mid-cap index too is slightly off the highs of the day, but still holding on to gains of well around about 750 to 800 points. There you can see the dip, that slight dip that came in is now getting bought into again, 825 points higher on the mid-cap index as well. But moving on to a sectoral conversation, the Tamil Nadu Money Lending Entities Bill, now which has been tabled to prevent coercive practices by money lending firms. Now, this bill aims to help economically weaker sections of the society. Now, to assess the impact of this on the microfinance institutions, we are now being joined by Sadaf Sayeed, who is the CEO of Muthoot Microfin. Sadaf, good afternoon. Thank you for joining in. I'd like to first start off with this. Right now, this bill that has been tabled in Tamil Nadu, what do you make of this? And it's a similar kind of a situation that has emerged in Karnataka as well, right? So, do you see that kind of a situation festering in Tamil Nadu as well going forward?
Good afternoon. Thank you for inviting me here. I think, first of all, let me mention that these are very early days. We are still assessing the bill and its impact. But on the face of it, I think one thing I would like to categorically mention that this is not exactly like how the Tamil Nadu bill was put in place, because Karnataka bill was put in place because Karnataka, after a lot of advocacy, we were able to convince the state government to exclude regulated entities out of the purview of that bill. As we read the Tamil Nadu bill, it already takes into the consideration that the regulated entities which are registered with RBI do not come under this bill. I think from the overall spirit of the bill and the content of the bill, it seems like it is for prevention of coercive practice in lending, which is being followed by unregulated entities. In essence, this is positive. I think this is good because we also don't want unnecessary stress over the customers. There are unregulated entities which are lending and they are following practices which may be coercive and may be forceful in nature in terms of recovery. I think those needs to be prevented. And in the long run, I think this would be good for the regulated entities, because as these entities move out and they don't indulge in lending business, there would be more healthier practice in terms of lending and recovery with the customer, and more market would be available. I don't think so. The impact of this bill would be similar to what happened in Karnataka, because Karnataka that was more driven out of a lot of reportage on various issues which are happening because of money lending activities, and it was envisaged to cover microfinance. But this bill is overall covering all the lending activities, be it NBFCs, cooperative, and other banks and other entities who are lending. So I think it's significantly different than Karnataka bill.
Okay, got that. Mr. Sayeed, how big is the unregulated market in Tamil Nadu? How many unregistered lenders are there? And what would be the size of, the overall amount that they have loaned out?
Yeah, difficult to gauge, what is the unregulated space in terms of lending. I think it is estimated to be somewhat similar to what book we have in terms of the regulated entities which are there. So it is estimated to have around 20,000 to 30,000 crores of loans which are lent by various entities, which includes online players as well, which are not registered as NBFCs. So they are also there. They are operating from different zones, different territories. Local players are also there, which are lending under different structures. They are not registered with RBI. They don't come under the purview of the RBI.
So to your mind, in your assessment, 20 to 30,000 crore is the amount that these unregulated, unregistered lenders have loaned in the state of Tamil Nadu.
Correct.
And for you, the opportunity, or for players like you, the opportunity is market share.
Yes,
correct?
Absolutely. So we are one of the leaders in Tamil Nadu, and Tamil Nadu is a very mature market. It has always been among the top three kind of a portfolios for microfinance since last 15, 20 years. And we have been in operation for 15 years. We are one of the leading players there. So we have seen the behavior of the customer is quite stable. And also the income levels of our customers are much, much better than some of the other markets. So I think from that perspective, it creates a lot of opportunity for us.
But Sadaf, do you believe that if at all firstly, have you seen any stress on ground? You've mentioned that Tamil Nadu is a very mature market, but are you seeing any stress on ground? Because there has been a lot of talk about this MFI stress. The companies have come and spoken on record about it. Have you witnessed anything on ground when it comes to a state like Tamil Nadu? And if at all there is stress on the ground, do you see a contagion effect spreading to the rest of the South Indian market as well, considering that there is a higher share of MFIs in that region?
So South is a very mature market as such for microfinance. I have not seen so far, as I said in my opening remark, these are early days. But as of today, we have not seen any impact on the ground for these news that have come in. But to tell you that the difference between what happened in Karnataka and what is happening in Tamil Nadu seems to be from a point of view of protecting the customers and protecting the vulnerable client. I think what happened in Karnataka was more driven by reportage. I don't want to blame the messenger, but a lot of media reportage happened on microfinance, and because of that, some legislation came into play. But here, I think it's slightly different in Tamil Nadu. It is a preventive measure to ensure that the economically weaker section does not get harassed unnecessarily. And people who are indulging in lending activity which are not registered do not indulge in any coercive practices. So I think these two nuances are quite important to understand. And from a customer point of view, the customer is fully aware that the obligation that they have from regulated entities, they would have to honor. And Tamil Nadu being a mature market, the literacy rate is also quite high. So people generally honor their commitment. So that is what has been our experience.
So you don't fear that the culture amongst the borrowers will change or deteriorate because some section of them, will not have to repay to the unregulated lenders. You don't fear any delay in recoveries or growth impacting for lenders like you.
Yeah, as of we don't feel that way. I think there is an important thing to understand that this is not any sort of waiver, or there is no such talk of waiver or any deferral or anything. This is only a talk about ensuring that the collection practices remain as per the RBI guidelines, and they are not any sort of coercive or forceful collection. So I think from that point of view, as long as you are an entity which is operating within the code of conduct prescribed by RBI and the various SROs, I think the business would be as usual. It would not get affected.
One final question from my end, Sadaf. Because of all of this, you mentioned that there are early days, and these are early days. But what about credit costs, asset quality? What is the feeling? What are you anticipating in the current quarter, and of course for FY26 as well?
I'm sorry, we are in the silent period. Our results are very close by. I can't comment on individual company, but I can tell you about the industry. Definitely, the credit costs are on the rise, and in the financial year end, most of the people will like to take the provisions or write-offs which are necessary to go into the next quarter in a cleaner slate. So the credit cost will rise. There are many reasons behind this. Of course, there was a credit cycle which changed during the last financial year, and there was a bit of a stress. In Tamil Nadu, there were heavy rains in 25 districts. So because of that also, there was an impact. In our case, we had natural calamity insurance for our customers, so we did not have so much of an impact on Tamil Nadu portfolio. But overall, definitely the credit costs are on the rise for the industry.
All right, Sadaf, thank you so much for sparing time and joining us today on this subject of the microfinance entity and the Tamil Nadu Money Lending Entities Bill as well. Well, by